Hi Forex traders, it's me here. Welcome back to Charis Trading Institute. In today's episode, I'm going to show you what I'm looking at from the markets today and going into this week. Okay, so we are going to be looking at the dollar index and foreign currencies so that I show you my anticipation on the dollar and the foreign currency, especially GBP USD, because it's a currency pair I love to trade. So this is the US dollar index chart. Okay, this is the 1 hour time frame, but because we already understand that the higher time frames are the main drivers of the market, I'd like us to go through the 1 week time frame so that we see what the drawn liquidity is on a higher time frame perspective before we refine it into the lower time frame. So let's go. So guys, this is my 1 week time frame. This is the higher time frame, the 1 week time frame, and currently we had an expansion to the downside and we started to see a level of rejection when price traded into this rejection block of the weekly time frame. If you don't know what rejection block is, I'd like you to quickly search on this channel the video where I recorded on institutional reference point and PDRs. I would like you to go through it so that you understand why this level is called the rejection block. Okay, so price traded into the rejection block and we saw a level of rejection in the last 2 weeks. Price had been rejecting as soon as it trades into that rejection block. Okay, this also is coinciding with a discount level. If you use your Fibonacci to measure between this swing low to this swing high, this is a discount region, a little bit below the 50% of this entire range. And remember, because we are smart money, we like to buy below discount and sell above premium. Okay, so price has traded into that discount and rejection of that block. I would like to see price at least show a level of retracement into this strong liquidity, which is the fair value gap of this 1 week time frame. Okay, this fair value gap is where I'm looking to see price trade into. And you should take note that this week we're anticipating FOMC news on Wednesday and we're expecting NFP on Friday. First Friday of every month is NFP news. Okay, so they are high impact news events. You don't want to be caught on the wrong side of the market during these trading days, especially on FOMC and NFP. Okay guys, so we are doing our analysis ahead of NFP and I'm looking to see price trade into these regions towards FOMC and NFP. Okay, so let's go to the 1 hour time frame or daily time frame just to refine these our levels. So you can see this is that daily time frame and this is more like this is the last place price broke structure. Okay, we need to see a rebalancing of this sell side imbalance and the buy side inefficiency. This is also another block, so I need to see price trade into premium of this daily range, this high, this low. I need to see price into at least 50% or premium or optimal trade entry, which is 62% of your Fibo levels. Okay guys, so let's go to the daily time frame, 1 hour time frame I meant to say. So this is our 1 hour time frame, and on the 1 hour time frame I'm seeing more reasons to anticipate a bullish bias on the dollar. Why? Because I'm seeing a low resistance liquidity run on the 1 hour time frame. These are market conditions I like to pay attention to, especially low resistance liquidity run. What are they? You can see them highlighted. Okay, I've highlighted the low resistance liquidity run. This is first swing, second swing, the third swing. If you put your trend line, because that's what retail will normally like to do, place a trend line. Because we are smart money, we want to trade into resistance or support and as well as trend line. So we like to pierce these trend lines because there is diagonal liquidity residing above it. We call it low resistance liquidity run. Okay, and above that level is our weekly draw on liquidity. Now let's look at what price has done today on the dollar. This is today's price action. We are seeing price rejecting of the breaker block of the 1 hour time frame. Okay, so where is that breaker block? This is the breaker block. Price from the high, lower low, and then broke structure or a change of character to the upside. Price has finally returned to retest that breaker block. Okay, so let me label it for your learning so that you see it's called the breaker block. and price has formed a bullish order block after trading into that breaker. This breaker, you now see price, this line is the breaker block. You see that price found support on the breaker and has created a bullish order block. Well, I would like to be buying rather than selling. It's really normal to think that price is going to sell because this looks like we are in a bearish order flow, but guys, this for me is a reversal pattern. I can be wrong, but what I'm seeing is really not the sells. I'm seeing something that looks like a reversal pattern. Okay, so price has created an external range, rejecting. I would like to see price trade into this bullish order block, and I'll be looking to go long on the dollar into what levels? These levels: buy side liquidity pool residing above relative equal highs, old highs, old highs, old highs, and the weekly fair value gap. Okay, so that's it for me. A bullish dollar. That means I'll be anticipating a bearish foreign currency, GBP, USD, Euro, or whatever currency associated to it. So let's check the GBP USD chart. So this is my GBP USD chart in the same way. This is the 1 hour time frame. Let's look if we have the drawn liquidity on the weekly time frame, and of course we do. Remember, price traded into institutional order flow entry drill, and then this is the drawn liquidity on the weekly, the fair value gap, and the order block. Okay, so on the daily we still see the same thing. Okay, these are those areas refined on the daily. Those old lows are levels of sell side liquidity, because sell side liquidity is residing below that old low you are seeing there. And on the 1 hour, let's look at today's price action on the 1 hour. Okay, so price consolidated a bit, then price traded above that level of consolidation or relative equal highs into what level? Into the other block here that has a fair value gap attached to it. Remember, we did mention that the most valid order block is the one that has a fair value gap attached to it. So price traded into that bearish order block. Okay, and price traded into that bearish order block and expanded to the downside. I would like to see price trade into this internal range liquidity, which is the order block, bearish order block, and I would like to be a seller into what? Relative equal lows or equal lows. What is residing there? Sell side liquidity pool is residing there. Old low, sell side liquidity is residing there. Then I can see a fair value gap. This fair value gap is from the 4 hour time frame. Okay, so this is my expectation on GBP USD. I really like to go short on GBP USD and go long on the dollar. So guys, if you like this video, I'd like you to click the subscription button. Don't forget, hit the notification bell so you stay updated every time I post a video on this channel. Let me know what your views are on the comment section, and let me know what topic you would like me address. Until next time, I wish you good luck, good trading.